Right now, as you listen to this, the most powerful tech companies on the planet are basically fighting a trillion-dollar war,
Yeah, and it's over a piece of machinery roughly the size of a double-decker bus.
which is just wild to think about. I mean,
Right.
a machine that uses microscopic explosions of molten tin, literally blasted by high-powered lasers, just to paint silicon.
Right, and when you hear people talk about the AI revolution, it usually sounds, so weightless, doesn't it?
It really does. We talk about the cloud or neural networks or virtual assistants answering your questions in seconds. It all feels entirely digital, like it just exists in the ether.
It's a very common illusion, honestly. We're conditioned to think of artificial intelligence as pure math floating around in cyberspace. We rarely stop to consider the staggering physical reality required to make that math happen.
But if you actually trace that digital ether back to its physical source, you don't find magic.
No, definitely
Yeah.
not.
You find massive, heavily guarded buildings, astronomical amounts of electricity, and some of the most complex, heavy, and outrageously expensive physical machinery ever constructed by human hands.
Exactly.
And that is exactly our mission for you today in this deep dive. We're looking at a stack of incredibly revealing source material. It's the Q2 2026 earnings call prepared remarks from CEO Christoph Hukett and CFO Royer Dasa of a major semiconductor equipment manufacturer.
And we are going to cut right through the heavy financial jargon in these remarks, because hidden inside these ledgers and quarterly figures is the actual physical blueprint for the entire global AI boom.
Okay, let's unpack this. Because to really understand what's happening right now, you have to look at it like a digital gold rush.
That's a great way to frame it.
Right.
Well,
Every major tech company on the planet is rushing to stake their claim in AI. They are the miners. But today, we aren't looking at the miners.
no, we're looking at the supplier.
Yeah, the source material we have today is essentially a progress report from the company selling the world's most advanced mining equipment, the ultimate picks and shovels operation.
It really is the ultimate bottleneck for the entire industry. I mean, by examining what these specific machines are being ordered and when they're scheduled for delivery, we're essentially looking at a roadmap for the future of global computing power.
Because you can't build the software without the hardware.
You simply cannot build the software of tomorrow if the machines required to build those chips don't exist today.
So let's dive into the immediate financial reality, because the sheer amount of capital changing hands here is just staggering. In Q2 2026, their total net sales hit 9.3 billion euros.
Which is massive.
Yeah, and that actually beat the high end of their own guidance.
It's a phenomenal figure for a single quarter, but the breakdown of where that money came from tells a much deeper story about the tech landscape.
Right, let's break it down for the listener. So, net system sales were 6.6 billion euros. And that was split almost perfectly down the middle, 51% for logic chips and 49% for memory chips.
Very balanced.
Yeah. And out of that 6.6 billion, 3.8 billion came from their most advanced EUV systems, that's extreme ultraviolet lithography, and 2.8 billion came from non-EUV systems.
Financially, this puts the company in an incredibly dominant position. We're looking at a net income of 2.9 billion euros for the quarter.
Wow.
Yeah, that translates to a 31.3% profit margin on sales with an earnings per share of 7.59 euros. Plus, CFO Royer Dasa noted they ended the quarter sitting on 7.6 billion euros in cash and short-term investment.
Which they are funneling right back to shareholders, by the way. They executed a 1.1 billion euro share buyback this quarter alone, plus some pretty hefty dividends, including a 1.88 euro interim dividend for Q1 2026.
Right.
But wait, I have to stop here and push back on something because the math in this report was genuinely confusing me earlier.
But what stood out?
The CEO mentioned that in this quarter, out of that 3.8 billion in EUV sales, they only sold exactly one of their absolute cutting-edge, next-generation high-NA systems.
Yes. Just one.
If they only shipped one of their shiniest new toys, how on earth did they blow past their revenue guidance by so much?
What's fascinating here is where that extra revenue actually materialized. It wasn't from a massive, unexpected fleet of new machines rolling off the assembly line.
Okay, then where did it come from?
To understand the revenue beat, you have to look closely at a specific line in CFO Royer Dasa's remarks. He points to 2.8 billion euros in what they call installed base management sale.
Installed base management. Okay, in plain English, what are they actually selling there?
Upgrades, software enhancements, and highly specialized maintenance.
I see.
That specific category came in nearly 300 million euros above their own guidance. Tech companies are in such a desperate, frantic race for compute power right now that they simply cannot afford to wait for new factories to be built or, new machines to be delivered.
Because the lead times are too long.
Exactly. The lead times are too long, so they're pouring money into upgrading their existing equipment.
So earlier I was thinking about this like a race car in a pit stop.
Okay.
Instead of waiting for next year's model, you're paying mechanics a premium to swap out the engine parts while it's in the pit stop, just to shave milliseconds off your lap time right now.
You have the right idea, but the reality is even more extreme because you can't just take a $300 million microchip machine offline without losing millions of dollars an hour.
Oh, wow. Yeah, that makes sense.
What they're actually doing is paying for algorithmic upgrades to the software that aligns the silicon wafers. They're swapping out optical components to increase laser intensity by fractional percentages.
Just squeezing out every drop.
Yeah, they're paying top dollar to squeeze every possible nanometer of performance out of the hardware they already bolted to the floor 3 years ago.
And I imagine for the equipment manufacturer, sending out software patches and replacement lenses is vastly more profitable than building a whole new machine from scratch.
Immensely profitable. The CFO explicitly noted that the contribution of these very high-margin components and upgrades within their installed base business is what drove the overall company gross margin up to a massive 54% for the quarter.
So having these chip makers soup up their old machines while simultaneously buying new ones begs the question, why this sudden panic?
Right.
What exactly are these machines building that is causing such a frenzy in the market?
It's a full-blown arms race in both logic and memory. Let's start with logic. CEO Christoph Huket stated they expect advanced logic foundry net system sales to grow over 25% this year.
25% growth in a single year for industrial machinery that costs hundreds of millions a pop.
Mm-hmm.
What is driving that specific spike?
First, they're heavily expanding 3-nanometer capacity. This is specifically to build the latest generation of AI accelerators.
Like the massive power-hungry chips that actually train large language models.
Exactly. But the demand profile is surprisingly broad. They're also seeing huge demand at the 5-nanometer and 4-nanometer nodes.
Because AI isn't just a giant server farm somewhere anymore. You need other chips to interface with it.
Precisely. You need a diverse ecosystem of chips to surround and support those core AI processors, things like networking chips, power management, data controllers.
Right, they all have to work together.
And simultaneously, the 2-nanometer node is ramping up rapidly for high-performance computing and mobile applications. Consumers want AI running locally on their smartphones, which requires incredibly dense, highly efficient chips.
Which is hard enough, but...
And if that wasn't enough to strain the supply chain, customers are already actively planning investments and securing capacity for the 1.4-nanometer node.
1.4 nanometer. That is almost incomprehensible for the human brain to visualize. I read that a single strand of human DNA is about 2.5 nanometers wide.
It really puts it in perspective.
We're talking about manufacturing intricate 3D physical objects on a scale nearly half the size of DNA, at commercial volumes of millions per day. And it's not just logic chips doing this, right? The memory sector is going absolutely crazy according to these numbers.
Yeah, the memory figures are even more aggressive. They anticipate memory-related net system sales to grow by over 75% this year.
75%? That is wild. What is happening in memory to justify that?
It's being driven by severe structural supply challenges. The prices for DDR memory and HBM, that's high bandwidth memory, are shooting up. HBM is the absolute critical bottleneck for AI right now.
How so?
Well, traditional memory is like a one-lane road. You can only pass so much data to the processor at once. HBM is like a 100-lane superhighway.
Okay, got it.
But to build it, you have to take multiple memory chips and physically stack them on top of each other like a microscopic skyscraper, literally drilling microscopic holes vertically through the silicon to connect them.
That sounds incredibly difficult to manufacture.
It requires immense precision and entirely new manufacturing flows, which of course requires vastly more lithography equipment.
So the high prices are funding the expansion.
Yes, this price spike in memory has given manufacturers the financial green light to make massive capital investments. They aren't just adding a few machines, the CEO mentioned. They are planning multiple megafabs entirely dedicated to this process.
So what does this all mean? We have logic growing 25%, memory growing 75%. How does the underlying manufacturing technology actually have to change to keep up with this?
The CEO used a highly specific industry term for this transition. He said these market dynamics are driving an industry-wide increase in lithography intensity.
Right. And he specifically mentioned replacing something called multi-patterning with single expose UV. I was looking into this, and let me try an analogy here.
Go for it.
Imagine you're trying to paint an incredibly detailed, intricate pattern on a tiny grain of rice. Multi-patterning is like using 5 or 6 different stencils. You paint one part, let it dry, carefully line the next stencil, paint again.
And that takes a lot of time.
It takes forever. And if your hand shakes even a fraction of a millimeter on step 4, the whole grain of rice is ruined.
It's a notoriously tedious process, and as you noted, the risk of defects compounds with every additional step.
But single exposure UV, this extreme ultraviolet tech, is like suddenly being handed one single, perfect, incredibly detailed custom stamp. You just press it down once and boom.
Just one step.
The entire complex pattern is there in a fraction of the time, with way less chance for a misalignment error.
That mechanism is exactly why this transition is so critical. The aggressive push for AI has unified the dynamics in both logic and DRAM memory. Historically, they evolved at slightly different paces.
But not more.
No, now both sectors are rushing headlong toward that higher lithography intensity. They both desperately need that custom stamp you described to make these tiny 3, 2, and 1.4 nanometer structures economically viable at scale. Reducing the number of steps is the only way to increase the manufacturing yield.
Which brings us to the absolute bleeding edge of physics. To hit that 1.4 nanometer goal, you need the most advanced machine ever conceived. We mentioned earlier they shipped one high-NA EUV system this quarter.
Yes, the high-NA.
Let's talk about high-NA, because there was a massive milestone buried in the press release notes.
High-NA EUV is the next massive technological leap for the industry. NA stands for numerical aperture. Without getting bogged down in optics equations, a higher numerical aperture physically means the machine has much larger lenses that can capture light at wider angles.
So it's basically a much better camera lens.
Essentially, yes. This allows the system to focus the extreme ultraviolet light into even smaller, sharper, tighter patterns on the silicon. The CEO noted that they're making very good progress maturing this platform for high-volume manufacturing. But the real headline is who is actually using it.
Intel Foundry.
Yes. The source text highlighted that Intel Foundry is officially using this high-NA EUV technology on their Intel 18A process node to produce a subset of its Intel Core Ultra Series 3 processors.
No, I have to ask, why is that specific announcement such a big deal? I mean, Intel makes chips all the time. Of course, they're using the new machine.
If we connect this to the bigger picture, it fundamentally shifts the risk profile for the entire semiconductor industry.
How so?
It's one thing for an equipment manufacturer to say, look at this amazing machine we built. It prints perfectly in our pristine, highly controlled laboratory. It's an entirely different animal for a titan like Intel to integrate that machine into a messy, high-volume production line and successfully yield consumer-grade processors.
Oh, I see. It proves the machine actually works when the financial pressure is on and millions of chips need to be shipped.
Exactly that. It serves to massively de-risk the technology. When Intel proves the readiness of high-NA EUV in a production environment, every other competitor who is sweating over whether to spend billions on this capital leap suddenly breathes a little easier. The path is proven.
Okay, but this brings up a really obvious question for me. If high-NA EUV is the shiny new toy, the absolute pinnacle of technology that everyone needs for the AI future, does that mean all the older technology is just collecting dust?
You would naturally assume the older tech fades away, but the reality of the supply chain is showing the exact opposite.
Wait, really? Who wants to buy last decade's machine when the 1.4 nanometer revolution is happening?
Well, the older technologies are experiencing a massive concurrent boom of their own. The CFO noted that non-EUV net system sales, so the older generation technology, are growing around 25% this year.
Wow.
They expect to ship 130 immersion DUV systems this year, which impressively matches their massive 2025 output. Furthermore, shipments of dry DUV systems, which is even older tech, have increased markedly. They are also shipping 65 low-NA EUV systems, representing over 45% year-on-year growth.
I need to pause on that jargon for the listener.
Yeah.
Immersion DUV and dry DUV. What is the physical difference there?
DUV stands for deep ultraviolet. It's the precursor to EUV. Dry DUV simply shines the laser through the air onto the silicon. It's highly reliable but limits how small you can print.
And immersion.
Immersion DUV was a brilliant engineering hack. They literally flood the space between the lens and the silicon wafer with a thin layer of highly purified water.
Wait, actual water inside the machine?
Yes, because water refracts light differently than air, it bends the laser, allowing them to focus the beam tighter and print smaller features without changing the laser itself.
That is incredible. They're putting water inside microscopic manufacturing equipment just to bend the light. So they are selling everything they can possibly build across the entire spectrum, from dry DUV to water immersion to high NA. Why the massive demand for the old stuff?
Because the broader global ecosystem requires it to function. Not every single microchip needs to be 1.4 nanometers.
Right, like the basic stuff.
Exactly. Think about the chips regulating the battery in your electric car, the timer in your microwave, the power management chips on a server motherboard, or industrial sensors in a factory. Those do not require bleeding-edge physics. They require rock-solid, reliable, and highly cost-effective mainstream logic.
And as the demand for AI accelerators grows, the demand for all those supporting mainstream chips grows right alongside it, which explains a very specific geopolitical footprint in these numbers.
A very critical detail. The source material notes that China-related business continues to make up about 20% of their total net sales for the full year.
Which is a huge chunk.
And this is remaining steady as a percentage, meaning their raw purchasing volume is increasing in lockstep with the overall business. And the CFO explicitly stated this demand is mainly related to that older mainstream logic we just discussed.
So China is heavily securing the foundational chips that run the everyday modern world, while the US and others fight over the cutting-edge AI accelerators.
That is the dynamic playing out. And when you combine the bleeding-edge AI demand with this insatiable global thirst for mainstream logic, the financial projections become astronomical.
Right.
Driven by this continued strong demand across the board, they updated their full year 2026 guidance. They now expect total net sales for the year to land between 43 and 45 billion euros.
43 to 45 billion euros. That is a mind-bending amount of physical hardware being shipped. But here's where it gets really interesting, and honestly where I was struggling with the logic of this report.
Oh, what part?
CFO Royer Dasa mentioned they are having highly detailed conversations with customers well beyond 2026. He stated they are practically fully covered for low NA EUV orders for 2027, and they have already received a significant number of orders for 2028.
Yes, the long-term backlog.
How can a chip company possibly forecast their needs for 2028? Consumer tech changes every 6 months. A new AI model drops, like every Tuesday. How are they locking in billion-dollar hardware orders years in advance?
It seems completely counterintuitive to the fast-paced, agile world of software development I know. But this points back to a crucial structural detail the CEO mentioned earlier regarding long-term agreements.
Walk me through the mechanics of that. How does a multi-year agreement actually play out on the ground?
When you are building one of these mega fabs, a semiconductor factory that costs upwards of $20 or $30 billion, you're undertaking one of the most complex construction projects on Earth.
I can't even imagine.
It takes 3 to 4 years just to pour the specialized concrete to dampen vibrations, run the ultra-pure water plumbing, and secure a dedicated power grid. You simply cannot operate a project of that magnitude on a 6-month horizon.
Right. You need a longer runway.
The sheer scale demands unprecedented long-term visibility. So, the chipmakers are entering into massive long-term agreements with their end customers, the tech giants building the AI data centers, and then turning around and sharing those multi-year forecasts with the equipment manufacturer.
Okay, I see. So the chip maker is basically saying, look, we have a legally binding contract to supply this tech giant with 10 million AI chips in 2028, so we absolutely need you to deliver these 10 specific lithography machines by Q1 of 2028, no matter what happens in the broader economy.
That is the exact mechanism driving this backlog, and this raises an important question for the equipment manufacturer. How do you physically build all of this to meet those locked-in dates?
Right, they have to scale up too.
The demand forecasts are so overwhelmingly strong that the CFO announced they are planning to increase their low-NA EUV manufacturing capacity by around 30% in 2027. And they are currently investigating another 30% capacity increase for 2028. They are executing the exact same 30% scale-up for their older immersion systems.
Think about that for a second. 30% physical growth year over year on manufacturing machines that are the size of buses, require the purest mirrors ever polished, and use some of the most complex optics and lasers in the known universe.
It is an immense logistical challenge that borders on the impossible. You don't just flip a switch to increase production of these systems by 30%.
No kidding.
The manufacturer has to build their own new massive factories just to assemble them. They have to hire thousands of highly specialized optical engineers. And they have to ensure their entire downstream supply chain, the companies making the lasers, the robotics, the specialized glass, can also flawlessly scale their output by 30%.
It's a massive domino effect.
Yeah. It's no wonder the CEO pointed out that their next capital market day, scheduled for June 10th, 2027, will be a critical watch point for the industry. That is when they will update their long-term views to reflect whether the physical supply chain can actually keep pace with these market demands.
It really forces you to view the entire tech industry through a completely different lens. I mean, we started this deep dive looking at a 9.3 billion euro quarter, fueled heavily by companies frantically paying a premium to upgrade the machines they already have just to squeeze out a few more chips.
Just trying to keep up.
Right. We traced the physical arms race down to the microscopic 1.4 nanometer level and HBM memory towers. We saw Intel putting high-NA EUV into real-world production to de-risk the future. And we look at a supply chain that is desperately trying to scale its massive physical footprint by 30% a year out to 2028.
It's a massive undertaking.
And it all reminds you that the seemingly invisible, weightless world of AI you interact with on your phone relies entirely on the most complex, heavy, concrete infrastructure ever built.
And that profound contrast leaves us with a fascinating final thought for you to consider as you watch this industry continue to evolve. We are seeing multiple megafabs being planned across the globe. We are seeing multi-year wait lists just to get the machines, and literal years of concrete pouring before a single microchip is ever produced.
Right.
Yet, the software that runs on these chips, the AI models themselves, is scaling and evolving exponentially, seemingly week by week. If software scales exponentially, but the physical hardware requires years of rigid planning, billions of dollars, and incredibly delicate supply chains, what happens to the AI revolution when the unstoppable force of exponential software eventually hits the hard, concrete speed limit of physical manufacturing?